Welcome to Holistic Accountant Podcast, where we aim to showcase how adopting a holistic approach in accounting and tax maximizes value for clients. Beyond traditional tasks like preparing financial statements and tax returns, a holistic accountant focuses on offering advice that maximizes personal wealth on an after-tax basis. If you enjoy this episode, please consider leaving a rating and sharing it with those who might also benefit. And to ensure you stay updated, subscribe to our weekly email. The link is in the show notes. Okay, today Mena and I are going to talk about a topic that you wouldn't expect an accountant and financial planner to talk about, which is modelling. Of course, financial modelling, not fashion modelling or anything like that. We certainly can't extend ourselves to that topic. The first comment we would have, Mena will explain what is financial modelling and how to use it and the pros and cons. But if we think about the financial information that your accountant gives you at the moment, most likely it's a set of financial statements, which are going to include certainly a profit and loss, probably a balance sheet, of course, maybe a cash flow statement, but there really typically isn't a lot of other information in there. And they're really, you've got to do it for corporations law, just from a compliance perspective in terms of maintaining accounts. And it's obviously linked to producing year-end compliance, including your tax return. But as business owners, we should want to try and get as much value from our accounting relationship as we possibly can, including getting insights into our business in hopefully real time, so that empowers us to make changes to our business. And ultimately, we want to reduce the business risk and we want to maximize the profitability and then hopefully grow the business both in terms of revenue and profitability as well. And so the special purpose financial statements that your accountant prepares for you each year probably don't have enough information or as much information as they possibly could to give you those sorts of insights. And we should state, obviously those financials are prepared for you to ascertain the business's performance over the last year. Your bank will use them if you go to sell the business, though. So they're prepared for a purpose, but the purpose isn't necessarily going to help you maximize your business.
And I might just add that financial modelling isn't necessarily necessary for all businesses. It's more so relevant to sort of more complex businesses or businesses that have multiple revenue streams, whether it be from different products or services and so forth. If your business is quite straightforward in terms of, you provide, a limited amount of products or services, you probably don't need a detailed financial model or financial model at all. It's more so relevant to businesses that are a bit more sort of complex in nature. And financial models are quite unique to different businesses. So it's not a one-size-fits-all. It's something that needs to be developed with your holistic accountant to determine what KPIs and metrics you are trying to sort of measure, what's important for you to sort of track and know where your profitability lies, where your revenue streams are and so forth. And these are the sort of avenues that you get, or the information that you get out of financial models.
And so how do they prepare them, Mena? So we're all very familiar with the set of financial statements and what they look like. What does a model look like?
So a model involves a lot of back and forth in terms of learning what KPIs you're trying to track. So KPIs are typically designed to measure certain objectives, such as revenue growth or certain expense management. However, in standard financial reporting, you sort of get just a one size it captures, total revenue or revenue by certain, you can sort of separate it by maybe a couple of chart of accounts or something like that. And it might capture, let's use rent as an example in terms of expense. You might have rent expenses from multiple locations. So you want to capture your rent expense from multiple locations and attach that to, for example, to track it against their revenue from that location. These are the kind of things that financial models will allow you sort of to track to determine whether one location might be profitable or not, or one product might be profitable or not. And you don't get this out of standard financial reporting. Standard financial reporting just basically shows you a catch-all sort of values, which provide some value, but not a whole lot of value for you to make astute business decisions from.
Yes, obviously financial modelling can help us sort of understand the information in terms of what's happening in our business today and drilling down into certain products and locations, features, those sorts of things. But how can we use financial modelling in terms of planning for the future?
So in terms of, it helps you forecast. So for example, if you're considering, vertical integration in your business or considering taking on an additional revenue stream, it allows you to forecast what kind of metrics you need in terms of resources from a staffing perspective, from a business premises perspective. It helps you forecast, your overall ability to sort of actually produce, that certain product or service. Without that, you can't do that from a standard set of financial reports. It just doesn't provide you with enough information.
And like you said, Mena, if you've got a really simple business and you want to test something like what happens if I increase my price by 10%, and we've just got a very simple business, one product, for example, we can make some assumptions in terms of customer attrition, in terms of if I do increase my prices by 10%, how many customers will I lose, and therefore forecast the impact on profitability. You could do that on your calculator on your phone. You don't need a model to do that. But of course, if you've got a lot of interrelated factors that you need to sort of weigh out, particularly if you've got funding in terms of growth and things moving in different directions, it can be more and more difficult to ascertain and measure what happens if I do increase prices by 10%. Lots of things might change or give rise to additional costs or whatever it might be. And that's where modelling can sort of come into play. How often do we see clients use modelling? Do you think it's used as much as it should be?
Definitely not. And I definitely think it should be used for more sort of complex businesses, whether you're sort of in the manufacturing or you got multiple sort of products or service lines or service areas. I think it's really crucial because sometimes you could be servicing a particular area or have a particular product that you think is doing quite well for you because, it's adding great numbers from at a top line revenue perspective. But without the actual key figures underneath those revenue figures, you don't actually know what you're actually making. You could be at a loss. So it's really important to be using modelling to give you that information.
And as the business grows too, right? I mean, if we've got a really small business and you've got 2 staff members, not difficult to get a sense of how productive and efficient they are and how much input they're having, or output, I should say, good business results. As your business grows, particularly as it grows geographically as well, but also certainly by head count and by number of transactions, it's very difficult then to get an overall sense of how things are going. And that's really where you want your financial reporting mechanisms to really give you that sort of oversight and insight. And so, if you do have a different office location or business location and they're struggling, you're going to know about it. You don't have to jump on a plane and go and visit them to find that out. That sort of financial reporting is going to help you ascertain that. All right, so we just wanted to touch on financial modelling today, and it was a bit of a loaded question. As Mena highlighted, we think businesses can utilise this sort of service to a greater extent. We see a lot of value in it. It's not something that always a traditional accounting firm will provide. For example, we will more than often than not refer you off to a certain business that has the skill set in order to prepare these financial models. So certainly we're not saying it because, we're trying to grow our business or trying to sell an additional service. We're saying it because we've seen the benefits of, taking that financial reporting process one extra step further and really getting a lot of value from it. Okay, that's it for us for this week. Until next week, bye for now.